Hello, everyone. We are live. Thank you so much for tuning in again to one of these live streams. Hope you guys enjoy it. So, today we're going to be talking about IAC. So, I'm just going to share my screen quickly for you guys. 1 second. Okay, perfect. All right. Well, hope you guys can see my screen. So, IAC, I think this is a really important stock to look at. And recently, the stock has been down. It was at 150 or so, and now it's trading at about under $50. So, I think it's really undervalued. And the reason why I call it an undervalued blue chip stock is a lot of people haven't heard of IAC. I'm sure, majority of the viewers, unless you guys are really involved in the stock market investing scene, probably haven't really heard of this company. But you probably heard of a lot of the companies that this company has spun out. IAC is known as the anti-conglomerate. So their business model, and they started ever since 1995, when Barry Diller was first came to the helm. What they do is they go and they acquire companies that are undervalued, that people don't really know very well, but the IAC management sees some sort of value proposition. And then what they would do is they would grow these companies, and then when they feel like these companies are ready to stand out on their own, they spin these companies out. So, some examples of companies that IAC have spun out include Expedia, which I'm sure all of you have heard of. They've also spun out Match Group as well, which owns Tinder. They've spun out Vimeo. Ticketmaster is another example. So, this is, I think, a hidden blue chip stock because people recognize all of these names, but they don't know that these companies actually originated from IAC. And it's a very unique business model because most companies, when they develop, such as Alibaba or Tencent or Amazon or Google, they keep these subsidiaries within the larger umbrella of the company. There are very few companies like IAC that go acquire companies and then spin them out and then make that new spun out company as part of a dividend that they issue to shareholders. So I think this is a very special company. If we look at what's going on in the stock chart, you can see that they're down quite a bit. They were at about over $150 per share, and now they've recently dropped to below $50. And I think it's for a number of reasons. The first reason might be because IAC is one of those companies where investors get super excited right before a spinoff. So, sometime around 2021, they spun out Vimeo, and Match Group around this time was also made to be their own company. So there was a lot of excitement around 2021 around IEC because of these spinoffs. And after the spinoffs, investors kind of go away, the hype dies down, and they look for the next near term opportunity whereby they can profit because most investors tend to be short term focused. But I think IAC's valuation has come down to a point that makes it really interesting as a company to look at. Another thing that's causing IAC's valuation to go down by quite a bit, I think, is because of the recent underperformance of a lot of their assets. So, Angie has experienced some negative revenue growth recently, so has Meredith, and some of this could be due to macroeconomic conditions, but a lot of these reasons are actually because management is trying to restructure both companies in a way that primes them for long term growth and in the near term actually killing a lot of the revenue that they feel is underperforming. So in Angie's case, they're actually reducing their sales force and focusing more on customer experience and cutting back a lot of the revenue that they feel is underproductive, that hurt the customer experience and which has lower margins. With Meredith, it's something very similar. They're going through a restructuring where they're combining the assets of Dotdash with Meredith together, and this has created some near-term costs to the business. They're also letting go of some of the assets or some of the revenue that they feel is underperforming, and this has caused revenue in the short term to go down. Management says it's good in the long run, but whenever investors see negative 15, 60% revenue growth throughout a quarter, they start freaking out. So they've had a few of those quarters already, and that's caused investors to really turn on this company, which I don't think is fully deserved. And whenever there's an opportunity like that where a company starts to become underappreciated, it creates that value that you can get as an investor. So let's talk a little bit about IAC's history. Here you can see a complete history of IAC. They started out as a company called Silver King with a market cap about 250 million, and they've acquired companies like Ticketmaster sometime in the 90s. Match Group was acquired, as well as Hotels.com. You can see in 2005 they actually spun out Expedia, and they've acquired Ask Jeeves, acquired Vimeo, and then spun them out at about a $10 billion valuation around 2021. They've acquired Angie, TripAdvisor. They spun out the IPO'd Match Group around 2015, so that's the company that owns Tinder. And recently they've invested in two very well-known companies, Turo. I'm sure you may have heard of Turo. This is the app similar to Uber, except if you want to rent a car, it's like a two-sided market between people who want to rent their car and people who want a short-term rental. And MGM Resorts, I'm sure you've heard of this company. IAC acquired about a 15% stake in this company sometime during the pandemic, where everyone was freaking out about the future of resorts and casinos. And since then, the company has done really well, almost doubling how much IAC paid for the company initially. If you look at the value that IAC has contributed to shareholders, it's absolutely enormous. Right now, the market cap of IAC is about $4 or $5 billion. But if you factor in all of their various spin-offs, it's about $60 billion worth of value. Actually, this was taken from their 2022 June presentation. If you go to 2021, it should say about $90 billion or $100 billion in value created. That's because a lot of the companies that IAC spun out in 2022, a lot of these companies, their valuations dropped considerably. One interesting statistic to note about IAC is from the period of 1995 all the way to 2021, their compounded annual return was higher than Berkshire Hathaway's. So I think that just speaks to the quality of management at IAC, and I believe a lot of these near-term headwinds that they're facing can be resolved in the future. So this is again to showcase IAC's business model. What they do is they have a history of getting to a point where they grow their adjusted EBITDA throughout all their combined companies. And then during spinoffs, their adjusted EBITDA usually takes a dip. So there have been a few instances of this. One where they spun out Expedia, one they spun out Ticketmaster, Match Group, and Vimeo, and you can see the adjusted EBITDA rise right before one of these spinoffs, and then it drops, and it goes back up again, and then it drops. And recently, around 2022, their adjusted EBITDA was about 200 million or so, and it's to show that there is potential for another future spinoff that will create a lot of value for shareholders. And I think something that's really special about IAC is a lot of these conglomerate companies, they can be valued in a way where the sum of their parts is bigger than the whole. But sometimes, a lot of the time, these conglomerates have some difficulty with actually unlocking the value. While for a company like IAC, they unlock it naturally by IPOing out these companies and then issuing it as a dividend for their shareholders. Oops. Okay, so IAC today, after they spun out Vimeo as well as Match Group. They have a number of assets. So on the publishing side, they own Dotdash Meredith. This is a company that owns other companies that cover wine, recipes, as well as finance with assets like Investopedia. So this is kind of an online digital asset. They also have print publishing as well. Primarily, they make their money through advertising. On the home services side, they have a service called Angie or Angie's List. This is kind of a two-way marketplace for people who need to have work done in the home or a handyman, and it matches them with people who do the work. You also have family care through a company called care.com. This is a caregiver website and it's another two-way marketplace. It's for caregivers to find people who need caregivers. So for their children as well as for their seniors. They invested about a 15% stake that's turned into an 18% stake through MGM Resorts. So I'm sure you've heard of this as a Las Vegas play. They own a lot of casinos, entertainment experiences, hotels in Las Vegas. Turo, they own a 27% stake in Turo. I think this is a really exciting asset. This is a very fast growing company, growing their revenues in 2022 at about 59%. So a really exciting asset. They invested at approximately a $2 billion valuation or so, maybe even less than that. And since then, this company has done really well. Actually, I think their Turo investment was actually around a $1.3 billion valuation. So it's been a really good investment for IAC so far. They also own search assets. So some of you who might be a little bit older might remember Ask Jeeves, which was a competitor to Google sometime around 2005. That's when IAC acquired the asset, but this is the search services. And they also have a number of other assets as well. Blue Crew, Vivian, which is a two-sided marketplace for people who need nurses as well as nurses, and a bunch of Daily Beast, I think, is a online newspaper. Newco is their integrated startup incubator, which has about 140 or so different startups that they nurture. And they also have approximately $1 billion or $1.3 billion in cash. So this is what you get when you purchase IAC. And again, their market cap is approximately $4 to $5 billion. Now, if you value all of their individual businesses, you can see that the sum of the parts is a lot bigger than the whole. Now, looking at their two publicly listed assets. So the first one is Angie. Right now, it's been down a lot recently. The stock was somewhere around $3-4, even higher than that, and it just dropped to under $1 billion. But they own about 85% of the total shares outstanding for Angie, and they have 98% of the total voting power. And their stake is worth $811 million right now. With MGM Resorts, this is about a $12-13 billion company. Their stake is worth about $2.3 billion. I believe that Angie right now is substantially undervalued. A lot of this comes from the negative sentiments towards Angie because IAC is right now cutting a lot of revenue sources that they believe are unprofitable, that hurt the customer experience and is not good for the long run. And this short-term headwind is causing a lot of pessimism in Angie, which I believe will turn around as these changes show themselves to be good changes in the future. One of the things that they did was Angie would often have their sales force cold call a lot of their customers, let's just say asking them for roofing services. And it was very much a spray and pray approach. And while this generates revenue, this revenue tends to be more lower margin. It tends to hurt the customer experience as well because people don't like to be bothered like that. And Angie, under IAC's leadership, is really trying to turn that corner where they're trying to get rid of doing things like that and more trying to find people who have certain jobs that they want and certain jobs that they want to be completed, and then they would try to match that with a person that was best suited. So they're going after more high quality revenue. MGM Resorts, I think, also is an undervalued opportunity. Right now, they're purchasing a lot of their shares and buying them back. And I think there's a lot of room for MGM Resorts to continue growing, being the leader or one of the leaders of casinos, hotels in Las Vegas, which is the premier destination for a lot of gambling and resorts and other types of experiences. Although these are how much the businesses are currently valued in the public markets. We also have Dotdash Meredith. This is one of the most highest value internet brands right now in the world. They have 174 million US unique users, and these are all the brands that they own. I'm sure some of you recognize them. This is primarily a company that tailors to women, although I recognize Investopedia because I really like stock investments. But they have a lot of monthly active users here. And IAC acquired Meredith sometime around 2021 for $2.7 billion. And they acquired Dotdash sometime in 2005 for $410 million. So they acquired About.com and they rebranded it to Dotdash. And then they merged it with Meredith when they acquired Meredith in 2021. I think Meredith actually is worth quite a lot of money. Together with Dotdash, I think at least about $4 or $5 billion. I'll do a deeper dive on Meredith later on. However, if we were just to take the conservative valuation, we can say that Dotdash Meredith is worth about $3 billion on the conservative side. This is just to factor in the cost to acquire both assets, and it's also to assume that IAC, all of the work that they did following the acquisition, we're just going to discount and just take the fact that they spent about $3 billion on Dotdash Meredith. Never mind all the value creation that they did later on. We're going to take $3 billion as a conservative valuation. Next, we have Care.com. This company is growing very fast. IAC acquired this company sometime in 2020 for about $500 million. And since then, the revenue has grown about 80%. If we average the compound annual growth rate, it's about 20 or 21%. So I think based on the fact that the revenue has almost doubled and this company is growing very fast, that we should value it at about $1 billion. And this is a very valuable asset right now for IAC in a market I don't think has been tapped too much by digital, and they have a lot of potential to tap into this market and make caregiving a better experience through applying their online technologies. Next, we have Turo. This is another very exciting asset that IAC has. Recently, it's been valued at $2.7 billion. IAC owns about 31% of it, and they have warrants to purchase up to 35% of Turo, valued at $2 billion. I think this is an extremely valuable asset. If we look at Turo's financials, they grew 59% in 2020. In 2021, they actually grew their revenues about 200 or so percent. So this is a very fast growing company, and they're improving their unit economics as well, becoming EBITDA positive in 2022. So this is a very valuable asset. I think there's a lot of potential in the future for that two-way marketplace for people who want to rent out their cars, as well as people who desperately need to rent a car and form a third party. And I think right now this is a very powerful asset for IAC. If we assume that it's worth about $2.7 billion and IAC owns about 31% of it, their stake is worth about $837 million or so. Next, we have Vivian. This company, somebody recently acquired a $60 million stake in. So the valuation in 2022, when that transaction happened, makes Vivian worth about $400 million. IAC owns about 75% of the assets, so it's worth about $300 million for IAC. And we have Ask. This was purchased for $1.85 billion in 2005. Kind of an underperforming asset. I think we know the company that probably killed most of the business for Ask Jeeves. However, the digital revenues have been growing pretty substantially from about $500 million to estimated in 2023 about over $800 million. They have their desktop business, which kind of is a more legacy business. As you can see, the revenues have been declining, and in the future, this will probably make up a pretty negligible aspect of Ask's business. I think just to be conservative, we can value the business at about $1 billion, which is a lot lower than the price that IAC purchased it. I think, however, because the Ask Media business is growing pretty substantially and it'll probably be weighted a lot higher in the future versus the desktop business, I think a $1 billion valuation is reasonable for Ask Media. And of course, we have some of their other businesses as well. They have Blue Crew, which they recently sold to another company. I don't know how much they sold it for, but now they have a stake in that business, in the company that purchased Blue Crew. They have Mosaic Group, which does about 200 million or so in revenue. It's a mobile app business. They have the Daily Beast, which is an independent news source or an online newspaper. And they have Newco, which is an IAC incubator, holds about 100 or more small startups, which IAC is very known for nurturing. So some companies like Vimeo was actually part of an asset called College Humor. They sold College Humor to somebody else, but Vimeo was just a small part of that asset that ended up growing into $10 billion when it finally IPO'd. Match Group was pretty small, so was Ticketmaster. So a lot of these a lot of companies within this incubator could eventually be a very big company for IAC. I'm going to assume all four assets are worth about $500 million. So if we go do some quick analysis, and I'm assuming here the share price is about $50, if we take their total market cap of about 4.3 billion and we add the cash and minus the long-term debt, the enterprise value for IAC is about $4.9 billion. And here we've taken all of the valuations that we've done for their various assets, and I've come to about a $10 billion valuation for all of IAC's assets, for their publicly listed assets as well as their privately listed assets. So in total, I think the current share price, if we use the sum of the parts model, is about 50% undervalued. I think there's also a lot of potential for these assets to grow in the future as well. So right now it presents investors with a good margin of safety. However, if Angie turns around and starts doing revenue growth again, and if the restructuring merger for Dotdash and Meredith ends up going well, and the macroeconomic factors change, then both companies could continue to grow very rapidly. Turo is also angling for an IPO as well, and when that happens, it's a very, very good asset, and the IPO could unlock a lot of value for IAC's current 31% holding, and they have the ability to purchase another additional 4% of Turo at a $2 billion valuation. So I think there's a lot of upside right now for IAC. I think it's a very interesting asset. The last thing I want to talk about is just regarding the management team. So the management team is really stellar. They are paid a lot by IAC, but I think for good reason. The CEO or the chairman, actually, his name is Barry Diller. Prior to IAC, he's had a really successful career as CEO of Paramount as well as 21st Century Fox, had a bunch of hits there. Actually, he was, during his tenure, there was The Simpsons, which I'm sure you guys have heard of. And IAC has some really good results with the companies that they IPO'd. Expedia is right now about $14 billion valuation. Match Group, when it IPO'd, was at a $30 billion valuation. Vimeo, about $10.2 billion. Ticketmaster right now is one of the most valuable assets for Live Nation. So they are very successful and have a very good track record of taking these undervalued, unloved small companies and then building them up to being really powerful assets. Barry Diller is also known for the Diller Killers or the Killer Dillers. These are people that he's mentored that ended up being very successful. Two of these people include the CEO of Uber, as well as the former CEO of Disney, Michael Eisner. So Barry Diller has been known to mentor some really successful people, and I imagine he's done something similar to the current CEO of IAC, Joey Levine. Under Joey, he's a very thoughtful person. If you've ever went through Joey's letters to shareholders, you can tell that he's somebody that really values the long-term growth of a company as well as the customer experience over that of short-term gains in revenue or in earnings. He always wants a lot of these businesses to be able to do well in the long run, and it shows from the letters that he writes out. And that's something that I really respect. Recently, IAC has done some really good things for shareholders. Angie was acquired for about $780 million. So even with the drawdown of Angie's share price, I think they purchased it at a pretty good valuation. Turo, I think, was a really good investment by IAC, as well as Care.com and MGM Resorts. I think MGM Resorts was purchased at a really opportune time during the pandemic, and that's shown in how much value they were able to unlock by getting in and almost doubling how much their initial investment was. I think IAC is also good at allocating capital during times when they feel their share price is low. So when their share price dropped to about $51 or $45, they used about $165 million to buy back a lot of their shares. So I think this is a very good management team. I think IAC is a very compelling business to look at as an investment opportunity. So this is part one of my discussion of IAC. This is a very complex business to look at, but in the subsequent videos, I'll be diving deeper into their other assets like Care.com, Ask.com, as well as Angie and Dotdash Meredith. So stay tuned until then. Thank you so much if you watched all the way to the end. I think this is a really compelling investment opportunity right now. Again, not financial advice. I'm not a registered financial advisor, but I think it's worth at least taking a look at IAC and diving deeper into it. And I'll be doing that shortly in the next video. So thank you so much for tuning in once again, and I will see you all on my next video. Thank you.